Hello traders and friends. After delving more into the charts, I'm slightly more bearish going into this week than what I was earlier this weekend. You go into shorter time frames on the charting, and like the 1 hour charts here, and we do have what appears to be, especially on the SPY, this is the SPX, potential topping formation. We could very easily bounce off the cloud here and bounce up off of a support area here come Monday morning. But it's looking like we got a trend line below us here that should give us some support in the morning. Now if that breaks, then we could have a really interesting day tomorrow. Your SPY is a better shows your head and shoulders pattern, your short-term head and shoulders pattern, topping formation. We had some significant long-term weekly support that we rejected Friday, and Friday, and we actually broke down below a second support area Friday too. So, and that was largely caused because Thursday night paid out a dividend, forcing SPY to gap down. Your NYA, your New York Stock Exchange Composite Index, if you notice here, it's wedged out to infinitum here. Typically that's not good for the upside. We'll see what happens. But when you go all the way to the very end of the wedge, that means there's really no pressure either direction. It could just go sideways here. But in the short term, it's probably more of a bearish since we're already in the cloud. Surprisingly, the small caps didn't do too bad. They were doing better than the Nasdaq there Friday. Okay, and I mentioned this because we closed right on this trend line on the Russell, and if we open lower tomorrow, or even gap down lower, we're going to be breaking the cloud, and we've broke a trend line at 2 trend line supports. So we've got 3 supporting areas here suggesting your Russell will go up in the morning. So we'll see what happens. I'm going to finish off my indices with the NASDAQ NQs. That's the 100 NASDAQ, and it was very weak Friday, and we're bouncing off this cloud, which is typically a bounce point on it, but we put value in right next to the cloud. So keep this in mind. We've already broken the first primary uptrend, and I believe if you draw a line right here, it's going to come out right about through here. So we should be crossing that one way or the other tomorrow Monday morning. Another chart I wanted to bring up was your IYT, that's your transportation index, which is heavily weighted with the railroads. We did break down, we had the breakout going on from the Trump rally to all-time highs, and now we've broken back down below prior highs. So this is a failed breakout pattern right now. We could actually rally back up, and this could simply have been a second touch retest for a move higher, but this is looking not good, and we have crossed over the long-term uptrend on this ETF, suggesting that the momentum to the upside is in trouble. I also want to mention the retail ETF is a broken pattern, and the brick and mortar retail has just gotten destroyed, and it's not looking any better. If anybody noticed, Shield, Sears Holding, it actually broke below $10 Friday. So not good, and now analysts are calling for below 8, and JCPenney's here a year from now is probably going to go bankrupt. So that's just something to keep in mind and on watch, because this is not good going into Christmas season with retail falling apart. Some stocks I have on my watch list is like Boeing. We did cross below the cloud, and we closed right on the trend line Friday. So this one here I think is a failing pattern. and expecting lower prices. Another theme that I do want to mention in this video is seasonality comes into play sometimes into some of these sectors. And like I was showing you on the NASDAQ, it was testing support. Well, the XCI is the AMEX Technology Index, and typically that is a short at the 1st of January for a was it 6 to 8% move lower. Okay, so I just wanted to give you guys a heads up on this. Another one I want to mention is your XTC, which is your North American Telecom Index. Typically, or right now, this time of year is typically a bullish period for telecom, and it's nearing the end of its seasonality period. So, and it's not breaking out, so that suggests to me that telecom is going to be stagnant to lower from here. I wanted to give you a quick look. This is a seasonality diagram from Fidelity. It's a free diagram you can get from them, and I just wanted to point out XCI, which is typically your FANG, a lot of your FANG internet related tech stocks, they all are typically a short. See, you know, most years you're looking 6 to 4% the past 5 years sell off. Another seasonality chart that I do want to point out is your oil index, and typically this time of year, pretty much all the way till July, you have an uptrend in your oil service oil patch, and so it's came out really good here. We have an inverted head and shoulders, and considering we got all the way out to July, it's a pretty good chance we're going to go back way up here to the we're going to do the whole measured move thing here, 300 points from here. So we're looking about over 1,500 up to these reference highs, probably but July or sooner. Lennar reports earnings tomorrow morning, and Toll Brothers blew their numbers out of the water. So just keep an eye on this one here for some upside Momo. Now keep in mind, in a higher interest rate environment, your home builder should be going down, but with all the loosening of policy with the banks to talk like that, it's what's really going to be important here is the guidance from Lennar, because they might actually be able to issue mortgages to a lot of people they currently can't. UPS reports Tuesday, and this is going to be a very important tell for Amazon and how that stock's trading. So I actually am long Amazon into UPS earnings, expecting a pop, and then I was going to sell before the earnings and get back in if it goes my way. Some other charts I've been looking at. Darden Restaurants, it's been on a tear with the election, and it's trading like it's an infrastructure play, which it really isn't. Okay, and then we have Valspar, which is a steel company, and it's going to give our first real good read about demand and stuff for steel products. I think this is going to really impact steel to the negative side. So that's just my personal opinion. And then Carnival Corporation. This has been lagging behind the airlines, and I think they're going to do just as well as the airlines on their earnings, and they're going to gap higher. Wednesday we have PayX. Let me turn that off. PayX, Paychecks, and with all the financials, we got a triple top here, and it hasn't broke out yet. I really do think the momentum is to the upside on this one here. Just waiting for the news to get behind it, because they can charge more for their loans as interest rates go up. Accenture, okay, this one here had an incredible move on the last earnings, 4.28% off their earnings report, so they must have had really good guidance. So it is looking like it's going to be making newer highs. That's Wednesday too. RAD is Thursday. That's Rite Aid, and I do not feel comfortable about this to the long side. I think, like all the other retail, that people are just not getting out to brick and mortar that much, and this one here has plenty of room to come down. And then finally, on the earnings, ConAgra. I think what you're going to hear on their earnings report is warning about the currency risk on this one. I don't know the company very well, but I do think that's what could be a headwind for on the earnings on this. Well, that's everything on the video, so thanks a lot.